Ladies and gentlemen, good day and welcome to Greenlam Industries Limited Q1 FY2024 earnings conference call. This conference call may contain forward-looking statements about the company which are based on beliefs, opinions and expectations of the company as on the date of this call. These statements are not the guarantees of future performance and involve risks and uncertainties that are difficult to predict. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star and 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Saurabh Mittal, Managing Director and Chief Executive Officer, Greenlam Industries Limited. Thank you, and over to you, sir.
Thank you. Good afternoon, everyone, and very warm welcome to the Greenlam Q1 FY24 earnings call. I hope you all have had the time to look at our results. They've been up on the websites of the company. And I will take this opportunity to brief you on the key developments in the quarter gone by and how we see what's happening on ground in both the domestic and international business. So in the Q1, we commenced production of the third line of the Prantij, Gujarat factory for laminates, which takes the capacity to 21 million sheets in boards per annum. We also commenced commercial production at the plywood factory in Tamil Nadu, which is a 18.9 million square meter capacity. It's single site largest plywood capacity as of now and the most modern plant of plywood in the country. The capex at the Andhra Pradesh project is going on, and we're hoping that within Q2 we will commence the laminate capacity, and within Q4 the particle board capacity will be up and running. So that's on the capital expenditure and the startups of the greenfield and brownfield lines. On the operations side, in the Q1, we built our teams for the plywood business in both manufacturing and sales marketing. We expanded teams in the domestic market for our existing business lines of laminates, veneer, flooring and doors. We had product launches of Greenlam, the flagship brand in the domestic market. We also launched the plywood brand in Q1. On the sales side, the domestic business grew about 12-13% in Q1. The export business grew by 5-6%. Though production of laminates was at the highest we've done till date in the quarter. Lots of it couldn't get converted to sales. About 20 odd crores of revenues were pushed to Q2 on the export front due to the cyclone issues and containers not being shipped out from the port and rail service getting disrupted. The initial launch of the plywood with the set of dealers in South India has been quite encouraging. We got good feedback from the market. We started shipping out products to the market, and the response has been pretty good. So we're hoping that in this quarter you'll see a ramp up of the plywood business too. On the demand side in the domestic market, obviously we hear from people that the market's a bit slow, etc. As far as we are concerned, with our expanded teams, refreshed product portfolios, ranges being refreshed, and the push we're giving to expand sales, expand channel, expand into smaller towns, geographies, extensive working on influencers with carpenters, architects, IDs. We think we should be able to, use this situation to our advantage and take more market share from the market. So I think we should be able to do fine in the market. On the international market too, I think with the range of products we have and the reach we have, here too we think our numbers should be aligned to the broad communication we've given on the growth for this year. And like we said earlier, FY24 we should be looking at a 20-25% of top line growth. So we think, despite what we hear and see, we should be able to make this number considering our existing product lines and the new capacities, few of which have already gone into production in Q1 and some will go into production in Q2. So that's a sense we have on the market. So as always, we are more focused on what we are doing, and we still see a large opportunity of the unorganized market in India to be taken and to be gained market share by our company. In the international market, though there's not much growth, but we think it's also an opportunity to take market share from the regional and the international companies operating in various markets. And so I think overall, with the direction we've set in, we think we should be running well. Raw material costs have more or less been stable in Q2, and we did see reduction in Q1. So I think on the raw material costs, sea freights both inward and outwards, we think this will be more stable, will be stable in Q2 on the lines of what was in Q1. There is some competitive pressures on people dropping prices, etc. As we talk right now, we haven't dropped prices in our category, although we have corrected case to case in certain segments, certain geographies, but by and large, we've retained the pricing. And as we always work on doing product development and improving the value mix, even if there's some drop in prices somewhere, we think that'll be offset by improved value mix. And so that's on the raw material cost side. So I think broadly that's it from my side. Ashok will take you through the financial highlights, and post which we'll be happy to answer your queries and questions if any. Ashok, over to you.
Thank you, sir. Good afternoon, friends. I'll take you through the financial performance. For the Q1 this year, on a consolidated basis, our net revenue grew by 9.5% on YOY basis and degrew by 3.5% on sequential basis, 515 crore. Gross margin grew by 730 basis points to 52.3% this quarter from 45% in Q1 last year. On a sequential basis, gross margin grew by 350 basis points. Gross margin in absolute term grew by 27% to 269 crore in this quarter as compared to 212 crore Q1 FY23. EBITDA margin was up by 180 basis points and stood at 12.5% in this quarter as compared to 10.7% corresponding quarter last year. On a sequential basis, EBITDA margin was down by 140 basis points. EBITDA in absolute term grew by around 28% to 64 crore in this quarter as compared to 50.4 crore in QY FY23. Net profit for the quarter stood at 32 crore in this quarter as against 24.6 crore in QY FY23. I'll move on to segmental performance. Laminate, which is the major segment. For this quarter, laminate revenue grew by 9.7% on year-on-year basis. However, it degrew by 4% on sequentially basis and stood at 472 crore in this quarter. Volume growth stood at 5.8% on year-on-year basis. Moving on to in this, domestic laminate revenue grew by 13% on year-on-year basis and remained flat on sequential basis in value term. Volume growth in domestic market stood at 18.4% on year-on-year basis. International laminate revenue grew by 6.4% on year-on-year and degrew by 7.9% sequentially in value term. Volume degrew by 8.1% on year-on-year basis. This degrowth was mainly on account of disruption at port services. EBITDA margin stood at 14.8%, a growth of 240 basis points on year-on-year basis and a degrowth of 80 basis points on quarter-on-quarter basis. Production volume was highest in this quarter and stood at 4.68 million sheets at a utilization level of 89% on enhanced capacity of 21 million. Sales volume for the quarter stood at 4.17 million sheets. Our average realization for the quarter was 1086 per sheet. This is up by 4.7% on year-on-year basis and 7.7% on quarter-on-quarter basis. I'll move on to decorative veneer and allied. This consists of decorative veneer, engineered wooden, engineered floors and engineered doors. In the decorative veneer segment, business were flat on a year-on-year basis and degrew by 7.5% on sequential basis and stood at 25.3 crore. Volume degrew by 8.1% on year-on-year basis. Sales volume this quarter stood at 0.27 million square meter. Capacity utilization in this quarter stood at 25%. Average realization in this quarter stood at 916 per square meter. Moving on to engineered wood flooring, revenue degrew by 10.7% on year-on-year basis and grew by 20.7% on sequential basis to 10.3 crore this quarter. Capacity utilization was at 10% in this quarter. Moving on to engineered doors, revenue grew by 92.6% on year-on-year basis and grew by 9.5% on sequential basis to 7 crore in this quarter. Capacity utilization of doors in this quarter was 14%. Now I'll move on to the new segment, which is plywood. We have started commercial production on 9th June in this quarter. The revenue we started with a small revenue of 0.8 crore in this quarter. Sales volume was 0.03 million square meter and average realization for this quarter stood at 233 rupees per square meter. Net debt for the quarter stood at 522 crore as against 312 crore at the end of last quarter. Net working capital in this quarter stood at 72 days, which is higher by 6 days on sequential basis, primarily on account of higher inventory due to higher stock at port, inventory being built up for plywood unit and laminate unit at new plant. That's all from my side. I will now like to open the floor for the question and answer. Thank you.
Thank you. Ladies and gentlemen, we will now begin with the question and answer session. Anyone wishing to ask a question may please press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. First question is from the line of Pradeep Chera from Lucky Investment Managers. Please go ahead.
Yes, sir. Your line was not audible. So, for the exports in laminate, what was the value and the volume growth YOY and QOQ? And second, when I was going through your presentation, there is a large expansion in the gross margin in the laminate business. So, if you could give color on the average for the paper, phenol and melamine prices that you would have experienced between Q4 and Q1 and what it is now for us to better understand this gross margin expansion, because there is a realization increase as well which is there in the quarter. So if you could give comments on these two areas.
Yeah. So in terms of value of export was 235 crore in this quarter. This is for the company as a whole, out of which 234 crore was laminate.
234 crores worth of laminates was exported.
Yeah.
And what would be
in terms of volume, it was 1.73 million.
What is the growth? YOY and QOQ?
It was volume degrew by 8% on a YOY basis.
And revenue by +5 or +6, whatever number you use.
Yeah.
Okay. And the second question on the averages for the phenol, paper and melamine prices between Q4 and Q1 and what it is now. So for us to understand the GM expansion.
That probably we will have do this offline.
But is the GM expansion because of raw material or it's because of the realization?
It's both. It's in terms of raw material prices also. Some of the raw material prices corrected, and as well as the improvement in the value mix also. And
will they correct more, which is what you are seeing in the current quarter, or now it's stagnated?
As we mentioned at the beginning of the call, now it is stabilized in terms of that. So what we see from here is more or less in the similar to what it was there in the Q1.
Okay, sir. Thank you very much.
Thank you. The next question is from the line of Rajesh Ravi from HDFC Securities. Please go ahead.
Hi sir, good afternoon. My first question pertains to again the gross margin. And you mentioned that this has improved on both count value gain as well as softening of raw materials. Look, the blended realization, we were expecting that with the contribution from the Prantij plant going up, the blended realizations may look down, but that is not the case. So can you explain, and is the current margin sustainable, gross margin I'm talking about, and what could be the direction for the full year?
So, on the sustainability of the gross margin, it depends on how things go. There could be 1 or 2% movement here or there because we also have not been able to sell, as we said, nearly 20 crores worth of exports have not got invoiced on sales. So maybe the gross margin could potentially come down by 1 or 2%. I can't say that so clearly. RM costs are stable. So on the question of the Gujarat plant and the existing product mix, so we always have this endeavor of pushing up the value mix and having some product development, adding new customers, expanding markets in categories where the value mix can be superior. So the push in the future and now always has been, while we drive for the commodity program from Gujarat factory, we are also upselling and premiumizing the other categories and other products. So I'm not sure how much will the Gujarat plant reduce the realization. It might just keep it stable, or there could be some minor correction. When the Andhra Pradesh factory starts, there, as you probably know, we're putting 2 lines for larger size laminates, which primarily will be exported, and some of those products will be sold in South India, which probably will have a better price mix, better value mix. So this could again get altered. So despite having higher quantity in the commodity segment, we may be able to, maintain or even improve the realization. It really depends on how it goes in the future. Does that make sense, Rajesh?
Rajesh Ravi? If there's no response from the current participant, we'll move on to the next. Before we move on to the next question, we would like to remind participants that you may press star and want to ask a question. The next question is from the line of Achal Lohade from JM Financial. Please go ahead.
Yeah, good afternoon. Thank you for the opportunity. What I wanted to check was with respect to the gross margins again. Can you help us understand in terms of the product mix, is there a change from fourth quarter to first quarter? And secondly, if I see the gross margins have improved by close to 400 basis points, but the EBITDA margins actually saw a contraction. So if you could elaborate, how do we explain this? Is there any one-off costs one-off incomes, etc. If you could help us understand that.
So with my limited understanding, the contraction of EBITDA is also due to higher, employee cost, some higher marketing costs this quarter. We're talking laminates, I guess, right now, right?
Yeah, I'm talking about laminates.
I'm talking laminates.
Only laminates.
So only laminates, if you see, EBITDA margin has come down by about 0.8%.
Yeah.
Which is, I would say, largely because the uninvoiced or unbilled revenue, if we had billed 20 crores more sales of exports, I think probably would have come to, I think Ashokji can say that better, nearly similar numbers of Ashokji.
Achal, in terms of this, from the quarter 4 to this year, as you mentioned in the previous time also during the quarter 4 earning call also, that that one of the TV ad burst which was moved from quarter 4 to quarter 1, so some of the expense has moved in this, and as usual in the quarter 1 you will have some additional cost in terms of employee cost, increase in the employee cost, and we are building up the team also in the build up the team. So those costs some were on additional in terms of that. So otherwise, if you see from 0.8 will be like 20 crore sales has been not come in this quarter. That could have been the impact on this.
Understood. So, in terms of the product mix, any change in that? Given
Not much of the change, except that this quarter we have launched our flagship 1mm catalog. So there might be some percentage, there might be some increase in this, but otherwise we are not seeing any huge change in the product mix.
Thank you. The next question is from the line of Parth from Investec. Please go ahead.
Hello. Yeah, hi sir. So can you hear me? Yeah, so thank you for
we can hear you.
I just had one question regarding volume. So if I see your Q1 FY2023 presentation, as per the presentation, the volumes are 4.12 and those have been corrected to 3.94. Like 5% deviation. So can you just help me understand why what could be the reason behind this?
We can probably come back to you on this. It is look same only.
Can you please explain the question again? Can you come again, please?
Q1 FY23 presentation, your
Parth, we are unable to hear you clearly. Can you use the handset mode while speaking?
Yeah, sure. So as per Q1 FY23 presentation, our laminates volumes were approximately 4.12, and as for the latest presentation, it is 3.94. So there's like 5% deviation.
I think it did change. Q1 is 3.9 something.
We will come back to you on this.
Okay, sir. Okay, done, sir. Thank you so much.
Thank you. The next question is from the line of Harish Shah from Dalal & Broacha Stock Broking Private Limited. Please go ahead.
Yeah, thanks for the opportunity. Two questions from my side. Firstly, in the export market, on an industry level, are the volumes of the laminates increasing, or is it just the case that the Indian players are gaining market share?
My guess is that Indian players are gaining more market share is more relevant.
Okay, so if you would, okay, yeah. And secondly, in terms of sheets, would you be able to quantify how much we lost due to the cyclone in terms of sheets?
Will be close to around 150-160,000 seats, which is not lost. It has been postponed from, let's say, the material which was stuck at the port and which is getting shipped, which is shipped in this month, July.
Yeah. Okay. Yeah. Yeah. That's it from my side.
Thanks.
Thank you. The next question is from the line of Udit Gajiwala from Yes Securities. Please go ahead.
Yes, sir. Thank you for taking up my question. So, firstly, if you could elaborate, what is the domestic demand panning out currently, and how do you see it taking shape for the rest of the year?
Very hard to say that to you. I just said that, we hear markets have been a bit sluggish, a little bit challenging, and like we said, we still think we have to do our stuff and not complain about what's happening in the market. So with our new revamped product portfolio, added team members, advertising, promotion, market share expansion, we said earlier we should be looking at overall a 20 to 25% kind of a top line number. That's what I can say. Exactly how things will pan out, I don't know.
Understood, sir. And sir, when we say that, from here the input cost is likely to be stable, so should we assume that for the rest of the year your Q1 margin will be what will be reflective for the annual basis as well?
So this is what we see as we see things now. At least we have a visibility of the RM costs of July, August, September, and if something dramatic happens, costs can again change. And on the margins, are we talking gross margins or EBITDA margins?
EBITDA front.
Yeah, I think it should be okay. I think because we also have lower sales in Q1, sales which got pushed to July. So things go well with Gujarat factory also got operational towards third week of May. So that runs well. We have some plywood losses also in Q1 of about 4 crores, right? For EBITDA loss of plywood because we just operated the factory for 15-20 days and the sales team is all built up. That's also incorporated in the Q1 losses. So I think if all these things keep improving, we should be able to maintain or make better the margins for the year.
Okay, sir. And so just lastly on the particle boards front, so I understand that we'll be commencing in Q4 of this fiscal. So 25 will be our first full year of operations. So how do you see those numbers panning? Do we see it being EPS accretive from what year?
This in the next year will be the first year, and we plan, as per our estimate, we will be able to do a sales of close to around 50% odd, and it will be increasing. So I think it will become more visibility will come in the second, third year in terms of that in that.
So first 2 years it will be, of course, at a loss on the PAT level?
May not be, depending upon it breaks even at the nearly at the first year level at EBITDA. So there might be slight loss at the PBT level, but in the second year we are hopeful that this should start adding at PBT level.
Got it. Thank you for answering. Thank you.
Thank you. A reminder to the participants, anyone wishing to ask a question, may please press star and 1. The next question is from the line of Rajesh Ravi from HDFC Securities. Please go ahead. Mr. Ravi, your line is in the talk mode. Please go ahead.
Hello, am I audible?
Yes, sir. Please proceed.
Yeah, you are audible.
Yeah, sorry, my line got disconnected earlier. And, in line with what the earlier participant was asking, could you recheck your volume numbers which you have shared? Because even the full year number, even after restating the Q1 numbers which you have, the full year number don't match with the quarterly and the annual numbers from the latest presentation.
We'll come back to you.
Sure. And yeah, that's all from my end for now. Thank you.
Thank you. A reminder to the participants, anyone wishing to ask a question, may please press star and 1. The next question is from the line of Sneha Talreja from Nuvama. Please go ahead.
Hi, good afternoon, sir. Just a few questions from my end. Firstly, on the margin front or the realization front, you have actually seen raw material prices moving down, because of which you've seen gross margins expanding. But at the same time, when I look at your realization, especially on the export front, they've gone up roughly by around 20% odd. Would like to know the reason for that. Why there's a difference? Because as we understand, it's still a competitive industry. Realization ideally should be falling when raw material prices are falling. So is it expected to come with a lag, or is it a product mix which will continue to help you?
I think two ways to look at it, Sneha. One is because the entire production could not be, more or less, could not be invoiced. So the denominator in terms of quantity, could be different. So assuming 20 crores was booked as revenues, maybe the realization would have come down. Second, as we said earlier, we continuously work on product development and expanding sales in the value mix business. We've also not been a large commodity-oriented player. So our segments of liners of commodity, obviously we have that segment. That's not a very large part of our business. So we have not seen much correction of prices in the export front. The rupee to euro conversion, rupee to pound conversion has also got altered, and rupee depreciation means the euro and the pound. I think that's also contributed to the realization. So what happens as we go ahead, not so sure, but really one, I think because of the denominator has not been normalized, that's also showing a slightly higher realization, which might get corrected. And it's also pushing to improve the value mix as we always do.
Understood. Just another question in that regard. Where do
Sneha, there's a lot of background disturbance from your line. And
is it better now?
Yes, it's better. I'll request you to mute your line when you're not speaking.
Sure, I'll do that. Just an extension to the question that I've asked regarding the realization. So given that, there was a product mix impact, there was an impact of, not booking the sales. I mean, some backlog now which will be taken in Q2. How do we see realizations going on from here? I do understand volumes will come back, but can realization see a sharp dip from here, given that, Q1 was an extraordinary quarter in terms of realization?
Actually, I'm not sure on that. Math on that. Because if you see Q4, we were like 1,008 rupees. If you see export, if you're talking exports, right now? Or overall?
Right now only exports, because that's where we've seen the major jump.
Yeah. No, actually exports was 1236 in Q4, and now it's 1290.
So from the quarter 4, if you see Sneha, there is not much of a difference. Of course, from 1 year it looks to be different, but on a quarter 4 basis, 3-4% gap in terms of that. So we are not seeing any major change except that last quarter, this quarter, there is some 20 crore sale pushed back. Apart from that, there may be some minor correction might happen, but we are not seeing any major change in this.
Understood, sir. Thanks, sir. All the best.
Thank you. The next question is from the line of Achal Lohade from JM Financial. Please go ahead.
Thank you for the follow-up. Sorry, I got disconnected. What I wanted to check, I think Sneha asked about the export realization. So can you help us with the domestic and the export realization for the fourth quarter and the first quarter?
Achal, we will do this offline.
Sure. Where I'm coming from, is there a change in the, because if I see the average realization for the fourth quarter was about 1,008, it's gone up by almost 8% QOQ, and you said that export realization 3-4% increase. So is there a substantial increase in the realization for the domestic market? And if yes, can you help us understand if there is a change in the mix, and how do you see it playing out over next few quarters?
The domestic realization was gone up by around 11% in that, and not much change in the product mix, as we said that, except maybe couple of percentage, as we said that we have launched our flagship 1mm catalog in this quarter. and during the launch normally some amount of additional sales might come, but we are not seeing a major change in this in the product mix.
So this 11% increase is effectively the price hike? Have we understood it right there?
We didn't do any price hike in terms of that from the Q4 to this year. It will be majorly in terms of the product mix only.
Understood. Okay, and any update on how do you see, how soon do you see this turnaround in the door and the flooring business?
So on the door, floor and veneer business too, one is the RM costs have stabilized, only got corrected because most of the raw materials of the segment is imported. And I think those benefits should flow in towards the end of this quarter, early next quarter. The loss versus Q4, I think, has reduced. Should be correct? Yeah. The loss versus Q4 has come down by about from 2.45 crores EBITDA loss to 1.6 crores. So I don't think we're too far from, at least becoming EBITDA positive in this category. Yeah.
Got it. That's all from my side. Thank you.
Thank you.
Thank you. A reminder to the participants, anyone wishing to ask a question, may please press star in 1. The next question is from the line of Jigar Shah from AK Advisors. Please go ahead.
Yeah, thank you for this opportunity. Sir, I have a couple of questions. So, what kind of strategic level changes are you making in laminates, let's say, in order to grab incremental market share?
That's a big one. So, I don't think much strategic level changes are being done. It's more, execution which is happening on strategies and directions we are already moving on. Right from expansion of the market with the Gujarat facility being bought, adding products in the liner commodity segment, also revamping ranges in a certain periodicity. So over the last 3 to 4 months, the product ranges of Greenlam, product ranges of 0.8 category. We just, actually in the month of July, revamped the bathroom cubicle range, which is the partition business, where the range was designed by British architects and our team. So I think it's a continuous program. So right from product range, expansion into various subcategories of the business, expanding reach in geographies, adding more dealers, intensive working, increasing the working with architects, IDs, carpenters, contractors for the home segment. So I think it's just like this routine, addition and expansion, and more execution across every customer segment and on the product side.
Yeah, sure. My second question was can you give the geographical mix of our overall export business and how is demand shaping up in specific markets?
As a strategy, we don't discuss about we don't share this geographical reach, but more or less, if you can see that it is divided into several segment kind of a thing, and that as a percentage, we don't want to give too much details which is not there in the public domain.
Got it, sir. Thank you so much. That's all from my side.
Thank you. A reminder to the participants, anyone wishing to ask a question, may please press star in 1. The next question is from the line of Prachi Sharma from East Capital. Please go ahead.
Hello. Good afternoon, sir. So I just have a couple of questions. If you can just throw some light on the product pricing and how are the pricing of the newly launched Casa plan?
So we are in the Mikasa ply. This will be more mid to premium kind of a thing, and we will be having our pricing. These are mostly in the south. We are launched only in the southern state of the 5 states which we have launched, and we will peg our price to the 2 national players in the zone only, plus minus 2 to 4%.
Over 2 to 4%. Okay, got it. Also, sir, if you can just give some view on the plywood market segment demand, how do you see it shaping, and what is your view in the, say, next few coming quarters?
So on the plywood segment, almost too early to give you a sense on how what's happening on the overall market as compared to as in our perspective or as relevant to our situation. So in plywood, as we talk right now, because it's very early days, we just made we've appointed about 300 odd dealers, and we've got good response from them because primary orders have come in. We still have to streamline the secondary demand, create demand in the market, get secondary sales out. So as we talk right now, it's all going broadly as per our plan. South is the largest market for branded plywood, and like we said earlier too, we have a good network in South India for our laminate products. So setting the network up, we feel fairly confident to do that. And clearly, I think there is competition in the market, so we'll have to work hard to take more market share.
Sure, sir. No problem. I will get back in the queue. Thanks a lot. That's all.
Thank you. A reminder to the participants, anyone wishing to ask a question, may please press star in 1. As there are no further questions, I now hand the conference over to the management for the closing comments.
Thank you everyone for joining the call today. For any further query, you may get in touch with us or to the SGA, our investor relation advisor. Thank you once again.
Thank you everyone.
Thank you everyone.
Thank you, members of the management team. Ladies and gentlemen, on behalf of Greenlam Industries Limited, that concludes this conference call. We thank you for joining us, and you may now disconnect your lines. Thank you.
Please subscribe and press the bell icon to never miss another update. Please like, share and comment.